Good morning, ladies and gentlemen. It is August 31st, 2023, 9:20 a.m. It is the last day of August. I am sorry to anyone who is wearing headphones, but at least you're now up in the morning. We have a lot to discuss today, ladies and gentlemen. Inflation has continued to come down. It's slightly up, but it's up within expectations, which is what's important. Today was a monumental day for inflation because it is the core PCE rating. The Fed cares more about today's numbers that came out that we're about to get into over headline CPI. And if these numbers came in worse than what was expected, meaning we were showing a little bit of a reversal in the context of where inflation was going, which 85% of analysts believe the Fed is going to pause because it's coming downward, then we would have had a much worse situation right now in the market. S&P is up in the market because inflation came in the right way, and most stocks are green. On top of that, we have some other breaking news today. Palantir has gotten a downgrade from Morgan Stanley. I have the report. I will be going through it. I'll be doing an in-depth video after the morning open, so make sure you watch out for that. But I'll be referencing the report a little bit in the market open and showing you what Morgan Stanley is saying. 21 pages they put out this morning, approximately at like 4:45 a.m. because as soon as you woke up at 5 a.m., that $16.35 we had in the pre-market went right down to $15.55. I think the stock right now is at $15.75. So we recovered a little bit of that, down 3.86%. Their core reasoning, and we'll get into it more in depth, is that AIP revenue growth is not there. And as a result of that, they see a 45% downside risk to Palantir shares going in at $9. They're raising their price target from $8 to $9. I have a lot of thoughts about it, a lot of ideas around it. I just got done reading the entirety of the report before the market open. So in the video I do after this, I'll go more in depth, but we're going to reference the report and you guys will see kind of where they get their logic from in order to be able to put out a report like this. And those are the main headlines for today. Joseph Villegas, Step Bro, Anthony, Nicholas, Charles, Pete, Socrates, Petros, hello from Greece. Hello, good morning. John Schwartzbeck, that's an awesome last name. Great morning. Thank you for being here. Missy, good morning. Thank you for being here, Missy. Robert, Ernest, Cactus, Imnop, Austin, Broccoli, Brob, Fetty, my brother, good morning. Good morning to you. Miami, Ren, Invisible Voices, David, Jew, Junior, Shintoki, Miguel, Geis, Crossroads, Stein, Sound. Thank you all for being here. Felicia, Kimberly, Surrey, TPL, Tobias, Benny. Hello from rainy England. Hello, Benny. We got to get your country to give us this Palantir deal, and we're going to talk about that a little bit later today as well. All right, so let's get into it. I want to go through the report first, and then we'll talk about inflation data. So here's the report. Again, a later video will be coming out much more in depth, probably 20-25 minutes I'll spend on that video. But from a bird's eye view, what is their core argument? The core argument essentially, which I don't necessarily disagree with, I just don't think it makes much sense. And I'll give you my logic for why. But first, what's their argument? Valuation overly reflective of Palantir's AI promise, but fundamentals remain mismatched. Essentially, when you go into this report, and again, if you want the report, just DM me on Twitter or email, I'll send you the report. The entire thesis is that AIP has yet to be monetized. So they believe Palantir shares are getting a massive premium, 150% premium in terms of the value of the shares because AIP revenue growth is not there. And so when you go through the entire report, as you can see, they see expected delays in AIP revenue contribution. They have a risk that the government business may not be able to offset a top-line deceleration, and that's due to increased competition for governmental contracts, which is fair. I don't know if it's the biggest reason to downgrade the stock, but it's fair. And a difficult setup into the second half of the year as revenue guidance already implies an acceleration in estimated organic revenue growth, which sets a higher bar for the positive estimate revision necessary to justify the valuation. The valuation right now at about $35 billion, Morgan Stanley just can't come to those numbers given the revenue growth has been deaccelerating at 13% year over year, probably going to end the year at $2.185 billion, so about 16%, which is much, much lower than industry standard peers, and obviously much lower than the 30% CAGR that investors were promised a couple of years ago. So again, their key points behind our downgrade: AI euphoria is already reflected in valuation, but will likely take time to materialize. Competition in the government vertical could intensify, and guidance implies organic growth in it, which is irreflective of the actual growth they need to have to justify the current valuation. On top of that, they believe the S&P 500 inclusion It could drive more institutional interest in Palantir, but we expect that at current valuation levels, the risk is more limited as the incremental active buyer is likely to be more valuation sensitive. And this makes sense to me. I think S&P 500 inclusion will happen next year. It depends on the price at which Palantir is at, which is going to trigger the average investor that's going to get in because all the institutions are getting in. No doubt we'll see institutions get in and that will help the stock. But the idea that explodes the stock is it's probably not going to matter if growth sucks. If growth sucks, then all those investors will just sell out of the stock and, they won't really care that much. And then in the context of large government contracts, such as the NHS deal and several US DoD awards, they believe that matters, but it's going to be more of a sell the news event if we were to get the NHS contract versus a, oh my goodness, the entire thesis on Palantir has changed. How do you not understand it? They just got all this money from the UK. This is an absolute buy. And as a result of that, they are downgrading the stock or upgrading it from $8 to $9, representing a 34x full year 2024 PE or a 1.6 PEG ratio, which is in line with infrastructure software peers, which is why I don't think the valuation argument is ridiculous. I think it numerically can be justified, but I think there are some weird arguments around how they put up this valuation, which is what I want to get into today. The report was pretty odd. Manu says they are putting it out because last quarter there was no sale on AIP. It was just a few markets just on the market. I agree with that as well. And we have some other people saying exactly they want to show revenue beats when they are old listed on the S&P 500. So a couple of things, and then we're going to get into inflation, and then we'll have the market opening in about 4 minutes. Number one, if every company was valued in the same logic as Morgan Stanley is putting out on Palantir, which is until we see revenue growth from AI, the company should not get any premium. No stock would be up this year outside of maybe Microsoft and definitely NVIDIA, because NVIDIA has shown the revenue growth and Microsoft has shown a decent level of like accelerated tangible proof that they're going to have revenue growth. But even Microsoft hasn't shown, like Microsoft earnings were bad last quarter. They went from 360 to 313. I don't know where the stock is at right now. I think it's at 320 because I think they only brought in 59 billion in revenue, which was it's at 329, just at expectations or slightly below. And so Microsoft has a really big market to be able to enter in the context of AI, especially if you just think of Excel, PowerPoint, Exceller, that's going to have Copilot, which is like another $30 a month. And you imagine 400 million clients paying for that. Like that's billions of dollars in revenue they can do additionally per year. They haven't done that yet. NVIDIA is the only company on the market that has actually shown AI, because they're selling the foundational layer for AI, GPU compute, is resulting in revenue growth. Obviously, their earnings were some of the best earnings we've ever seen in the stock market. If that's the case, I think the qualitative analysis around this report is very simple. Palantir is getting a premium because investors expect revenue growth to accelerate via AI. That is not here yet, which then begs the question, why isn't it here? And if you know anything about Palantir, the reason it's not here is because Palantir doesn't want to monetize something when they could be capturing market share, which is a very simple business argument in my case. Capture market share, then you monetize. This is the same thing Google, Microsoft, all these guys are doing. They have plans for AI monetization, but AI monetization is not there. So if Morgan Stanley thinks Palantir should be, given no premium because of AI potential eventual revenue growth, then that means why would any other company get that revenue growth in the context of AI? I'm not saying Google deserves to be valued significantly less than what it is right now. I'm saying if there's any AI investment premium on Google, Microsoft, Meta, etc., and they haven't justified to the market that AI is helping their revenue growth, they don't deserve the AI premium as per the logic of the Morgan Stanley report, which is why I ultimately believe the logic doesn't make the most sense in the world. Numerically, you can get to some of those numbers they're talking about. It's not crazy given the last quarter, frankly, was not good. But as a growth investor, you're paying for future growth. All of us are expecting Palantir to be able to grow in the future. So if that happens, then I think a lot of this report will make a lot of sense. Core PCE numbers came out. PCE month over month in July rose 0.2% versus 0.2 expected. Thank God, whatever God you believe in, the universe, whatever, thank your lucky whatever that we only had 0.2, because if it was 0.3, this market would be tanking right now. We need the Fed to justify a pause, and this core PCE was important for that. And then core PCE index year over year, I meant to say year over year versus month over month there, rises 4.2% versus 4.2% expected. So it rose up a little bit, but not as much as, or not worse than what the market expected, which was incredibly important for the market, because if it rose higher, we would not be having a good morning. A lot of the gains from yesterday would have probably gone away. And so we'll see what happens as the market opens. Right now, stocks look pretty okay. We have 12 seconds until we see what we're getting into. But core PC inflation was good enough to, I think, not, destroy some of the gains that we've had in the past couple of days. All right, here we go. Last day of August. 9:30 a.m., another day, another dollar. The stock market in the United States of America is open. Wake your ass up. Here we go. Palantir at $15.72, down 3% as the market opens. PayPal, $62. PayPal is up about 8% from its lows at 58. Now it's $62.84, down 0.88% to start off the market. Apple, 187. Apple's getting close back to that 190 range. It was at 175 on the lows after it sold off about 10% in the past month. Now back at 187. S&P 500, 451.70. We are up 0.15%. It is very nice to be above 450 on the S&P 500. 460 was the high. If we can recapture that 460 level, we might be able to make some momentum going into September and October. 493 on NVIDIA, up 0.27%. Riot, Marathon, these are the Bitcoin miners. They are up about 1% or 0.5%. Coinbase at $84. CleanSpark, another Bitcoin miner, at $5.35. Alibaba is down just a little bit. We're going to talk a little bit about what's going on in China as well. And some of the actions they have taken to try to get people to invest in the stock market. They've gotten rid of taxes that they haven't gotten rid of from 2008 to try to incentivize money flowing into the markets. And people are not doing it because they're just too afraid of the CCP. So we'll see what's going on there. Ginkgo Bioworks announced another partnership today. They are up 2%. The 21% from the Google partnership around LLMs has not gone down, which is really good for Ginkgo Bioworks investors. Arc Innovation, $43.84, nearing $44. Robinhood, $11.14. I did buy the Robinhood dip when the Robinhood dip presented an opportunity to buy itself. So Robinhood now down to $11.14, market cap at $10.15 billion. I think Robinhood is going to have an exceptional recovery towards the end of the year if the S&P can keep up its momentum and the overall market can go higher as inflation comes down. Remember that their assets under custody is now $94 billion, reaching about $100 billion. And that assets under custody number, it defines everything for them. More and more people are simply depositing their money into Robinhood, which is incredibly important. Affirm at $20, Disney 84, NASDAQ 14,000. We are above 14,000 on the NASDAQ. That is also really nice from a psychological perspective. Amazon 136, Google 137. Google 52-week highs on Google. Look at that. Put in the chat if you own Google. I do not own any Google. I bought 10 shares at $90 and then I ended up selling out of it I think 4 or 5 months ago. Let me know if you own Google. This is pretty amazing. We got Google at a 52-week high. It is up from 119 after earnings. So Google has been able to maintain its earnings pump. Enphase inching towards $130. Rocket Lab is $6.39. Tesla $257. Tesla also inching higher. The Wall Street Journal had some weird headline yesterday about a glass house and Elon Musk. I didn't even read the story. I was just like, this is the weirdest headline of the SEC is suing Tesla because they're building him a glass house or something. I was just like, okay, that's good to know. Snowflake at 157, up 1.39%. Truist Financial 30. Truist has been getting hammered over the past couple of weeks now at $30 as well. It hit an 11-year low at around $28 and it came up to 32. I did buy the Truist dip as well. So I continue to buy Truist. I've gone over my thesis many times on that, but I think a lot of the regional banks are being ridiculously valued because of concerns around interest rates and inflation. And a lot of that should be coming down to the downside. Now, if it doesn't, the banks are going to be in a tough situation. But if it does, the bank should be fine. And so that's why the core PCE on inflation was also incredibly important today to be able to come to a conclusion. All right. Palantir down 4.9%, basically down 5% on the day. So it is a green market. We've got some areas of red. We got NEO that's a little bit red. We got PayPal that's a little red. Alibaba's red. Palantir is red. Palantir, one of the main growth stocks today that is red. A lot of these other stocks, as you can see on the left-hand side of my screen, are pretty green. Shopify green. Confluent green. Vimeo is green. You guys remember Vimeo? Did you even know it was a public company? It was that video sharing. I didn't even know they were public. I was like, wow, Vimeo. Okay. Lyft is red. Square is at $58. Roku 81. Netflix 436. Netflix recovering nicely from $399 just a couple of weeks ago. Pinterest at 27. Microsoft at 330 and the Qs at 378. So it's a green market, at least starting off the morning open, but we've got Palantir down 5.6% because of the Morgan Stanley report that came out today. Sachin, thank you for being here. Also, Google is as good as censorship as the Chinese government. That's also true. Google does that, but they make money and the advertising helps them a lot. Why did you sell Google? Honestly, I don't even know why I sold it. I had 10 shares. I didn't really care that much about it. I probably sold it to just, buy something else, but I didn't think much of it. When I invested in Google, I just invested for the hell of it at $90. I really wasn't looking towards the thesis. That was a mistake. I should have been actually involving myself in what the thesis was around Google at $90, but that was in January. I was just kind of throwing some money around. So wish I had actually understood the thesis. I would have made it a much, much decent position in the context of the overall portfolio. Morgan Stanley just looking up to pick up cheaper shares. All right, let's get back into the Morgan Stanley report. So I touched on it just a little bit as we opened the market, but I know there's a bunch of new people here. So let me go through the headline again, and we'll get a little bit more granular into their bull, bear, and base case. Morgan Stanley has put out a report for Palantir to go to $9 from 16, 45% down. The POC excitement versus the market realities downgrade to underweight. POC means proof of concept. And so their argument is AIP is simply a proof of concept. It is exciting. It is given itself a market premium, but it is not a market reality. And as a result of that, the stock should go down. Essentially, AIP revenue growth is not there to be able to justify the multiple that the market is giving to Palantir. Here's an interesting thing that really interested me today as I was looking at what Morgan Stanley was trying to say. What happened to the finance junkies last night? We all got really tired. We'll be back tonight, but sorry for last night, guys. We just got really tired. All of us got super busy, but tonight we will be back and we'll have a lot to discuss. Okay, bear case, $4. This is a 24x 2024 EPS of 17 cents. Morgan Stanley will have it at $4. A base case of $9. This is what they think the current valuation should be right now. This is assuming the customer base grows at a 21% CAGR to 1,285 by the end of 2028. So right now we are at 421 customers. They're assuming if we get a 21% year-over-year customer growth, we'll have 1,200 by 2028. Presumably that should be conservative because AIP should be able to massively accelerate customer growth. However, the customer growth has pretty much sucked. I mean, it was all but declining last quarter. It went from 6.5 to 8% growth. Finally, after 4 quarters, we saw some uptick in customer count. So, I can't blame Morgan Stanley for being conservative on the customer count growth at 21%, which is a little bit higher than we have right now. Their bull case is $20, which is lower than Dan Ives. This is a discount of a 28x 2028 2028 full year free cash flow of $3.1 billion. They're assuming the customer count grows 23% to 1,400 by 2028. Average revenue per customer here would be $7 million. Right now, it's about 3.3 million or 2.9 million. Or sorry, no, yeah, 3.23 million. The average customer count we have right now. And they're assuming revenue grows at 30%. 2028 at $9.1 billion. So even if revenue growth grows at 30% year over year over the next 5 years, Morgan Stanley, which would put us at $9 billion by 2028, Morgan Stanley has a bull case of $20. Now, I think if we actually grow revenue at 30%, $20 is not going to happen, even if logically that may make sense because the market is the market. People like Palantir. It has one of the biggest followings in the world. And if you're going to grow that much, you're just going to get a higher multiple, right? More than what the numbers say. But we're not even at 30% year over year growth right now. And so that is the biggest issue, that if we're not at even, basic 30% year over year growth as a high growth tech company, can we even justify $20? Which is why I don't think the argument by Morgan Stanley is the worst argument in the world. Again, I'll go through my qualitative argument for why I don't like their argument, but from a numerical basis, they are correct. I mean, the fair value of Palantir probably shouldn't be $16, $17, $18 because the growth is not there in customer count, in revenue, or free cash flow is the only thing that they have that's really going for them. But the market cares a lot more about revenue growth at the end of the day, right? Like top line, how much are you actually growing to be able to justify this stuff? And the free cash flow being, I think, at 36% margins is amazing for GAAP profitability. But then when you look under the hood, the reason we're GAAP profitable is because of net interest income, because we have $1.5 billion in treasuries. Again, I say this as a Palantir bull. All of that I think is good for us to get to the next level. But until we see revenue growth, I don't think companies like, a lot of investment firms are going to be overly bullish on Palantir. The bear case assumes that revenue grows at 11%. 5 year. Right now we're at 16%, which means we would have $3.6 billion at the end of 2028, average revenue of $3.2 million. And the base case is $4.4 million, revenue targets of 19% 5-year CAGR. Now, what is the difference between what Morgan Stanley is saying and what Mariana is saying? Because I don't want people to get super scared about this report. I was speaking to a money manager from Texas this morning over email, and we were discussing the report. And it was really interesting because his argument to me, he's been managing money for about 30 years. He got into Palantir when it was about $7. And his argument to me was that the timing of the report really doesn't matter. It's kind of after earnings, after Bank of America put out the $18 maintain price target, and they had a lot of justifications for why $18 makes sense. Morgan Stanley comes out with a counter narrative. Morgan Stanley historically has owned Palantir stock, right? I mean, they had a $16 price target back in 2022. Things came down. Obviously, interest rates went up. So they've been here and there. But a lot of, it's very coincidental when the timing of the report came out, but it's also an argument around do they want more shares, right? Do they think this is a generational company that is going to have an amazing growth trajectory ahead of it? Do they think, again, this is not valuation-wise comparison, but something like a Tesla in 2014, 2015, where people didn't really understand it. The writing was on the wall. It was their market to capture, but they didn't show the numbers. And then finally, when the numbers are shown, Palantir doesn't have to go up 20x like Tesla, but Palantir can have a phenomenal return, and they want cheaper shares. I think there is one side of the camp that says, yep, they want some cheaper shares, and that's why they're doing what they got to do. They're putting out these reports, and they're justifying it with all these fancy numbers. But at the end of the day, they know where the stock's going, and they want the stock to drop down. The other side, which is the more left-sided part of your brain, analytical, says, look, the numbers just don't justify it. I agree with both sides. Ultimately, I come down to what Mariana said in the Bank of America report. And I think, again, it was a really interesting report because either she's going to be right or this dude from Morgan Stanley, what's this guy's name? Keith Weiss is going to be right. Either Keith Weiss and Sanjit Singh and Theodore Thun, these three guys that worked on this report, are going to be right, or Mariana. What is going to be the defining factor? The defining factor is going to be, can they monetize the crap out of AIP? And that's it. That's really all that matters at the end of the day. Over the next 2 years, can they show increased revenue growth from AIP? Remember, in Mariana's report, Palantir now down 7%. This Morgan Stanley report obviously hurting shares pretty badly, down 7% on the day. And this report is the only reason, because if you look at the rest of the market's green. The market's very green. Snowflake's green. S&P 500 is green. There's no reason for Palantir to be down outside of this report. So these reports do have substantial impacts. When Dan Ives put out his report, obviously Palantir went up to like $21. So, these reports do matter. Either Mariana is correct that AIP revenue growth is going to happen. And remember, 10 weeks of AIP being launched, there's 400 potential customers. I don't even know if Snowflake has a product like AIP, which is the thesis orienting argument around LLMs being adopted into an enterprise, which creates all of the productivity that Jensen Huang was talking about to contribute to GDP growth as a result of generative AI. That matters, right? That's one of the core pillars of the enterprise AI argument that Bloomberg says, $4.4 trillion will be spent by 2033. I don't even know if Snowflake has a product yet. I mean, when I went through their earnings, they talked about nothing about their Neva acquisition. They talked about nothing in terms of a AIP product. They haven't formally announced anything like that. And so the only thing that I've seen as a formal announcement that is competitive with Palantir is Microsoft's AIP. And whoa, what happened to PayPal? My PayPal options are up 30% this morning. Why is that? Is interesting. That's probably going to come down immediately. There's some mismatching on the prices. That always happens when it. All right, so you got Palantir down 7%, and PayPal options are up 40%. I think the core thesis here is going to be if those 400 customers that came within 10 weeks can be monetized, then we're going to see revenue growth. ChatGPT for the enterprise just came out, and it's impressive. And if it's as impressive or better than AIP, given Microsoft's ability to integrate system integrators, which allows them to have massive distribution, then it's going to be tough competition for AIP. But that is yet to be seen. And that's why I think this is going to be a very interesting market for Palantir, because either they're going to capture the whole thing, or they're going to be one of a couple of players that capture a decent majority of it. But either Morgan Stanley is right that until that revenue growth happens, we're going to see a decline, or investors are going to be happier that revenue growth is not now. They're taking market share. Eventually it will come all at once. And when it comes, it's going to be magnificent because they were able to capture market share while that was happening. And so we will see. We will absolutely see kind of where that goes from there. We got Chris Patel in the chat. He says, yes, but Palantir was invited, but choosing not to go supposedly. I think you're talking about Karp is not going to the AI summit. I don't know if Karp's definitely not going to the AI summit. I heard reports that he was. Yahoo Finance says that he was. I guess we'll see in a couple of weeks, but I'm not sure if that's happening. The one reason he might not go is because I think the AI summit is September 13th. Their AIP is September 14th. So that might be a reason he's not going. But again, not fully sure if that's the case. Chris says, Google is the one you want to be in. They are killing it in the AI space. Chris was texting me last night about some of the things he's seeing in healthcare AI, which I think makes a lot of sense. And obviously Google and Microsoft will be big picks. The one thing to remember is, again, and this is my critique of the Morgan Stanley report, Google and Microsoft have not shown AI as a premium to their revenue, meaning all the revenue they've gotten the 6 months of this year, maybe, you could say 1 or 2% of it has been due to AI, but all of it's been advertising, right? Microsoft's selling their basic products, cloud, all that stuff. I don't know if GCP and Azure have fully integrated AI. You could argue that they have, but that's definitely not showing incredible amounts of revenue growth that the market is expecting that's coming from them. So if you take the argument on this Morgan Stanley report, which is essentially, Palantir hasn't monetized AI, therefore the stock should drop 50%. if you kind of apply that argument to every other stock that has been hyped up due to AI premiums, then that logic would mean that the Magnificent Seven go to shit, right? That they all would fall, that they all don't deserve a premium. The only stock that deserves a premium, if you're using Morgan Stanley's logic on the Palantir earnings today, would be NVIDIA, because NVIDIA has shown revenue growth. NVIDIA has like destroyed revenue growth in the context of AI. But all the other tertiary and secondary derivative software companies like Google, Microsoft, et cetera, that are benefiting from AI and software, they haven't really shown in terms of revenue growth. They've put out a ton of fancy presentations and they said AI a billion times on their earnings calls, but they haven't shown concrete revenue growth as a result of that. Or if they have, it hasn't been like magnificent, as per the name of the Magnificent Seven. So as a result of that, I think the Morgan Stanley report is interesting. Do I think Palantir goes to $9? Personally, no. Could it? Yes. But for investors to give up 50% of valuation on Palantir because they think AIP revenue growth has not happened when the company is a growth stock and investors are intrigued by the potential growth and the strategic go-to-market they have and the impressive growth in customer count they've been able to achieve on the pipeline in order to achieve the growth go-to-market in terms of 400 customers potentially using AIP. I don't think we get to that $9. And if we do, I'm selling out of a lot of positions to get it. But I don't think we get to that. Can't tell, admit nothing. Shit ends up on the stream the next. Well, to be honest, you didn't tell me any companies that are using this healthcare AI thing. You just told me that you're seeing cool stuff in healthcare AI. But Grant, healthcare AI is big. And speaking of healthcare AI, Palantir has, in the Bank of America report, I think a lot of people didn't see this, Palantir has increased 93% year over year in terms of their revenue growth for just healthcare and 129% year over year growth in transportation, which was really interesting. I mean, they didn't highlight this in the earnings report, but they said this in the Bank of America report. So in 2Q 2023, Palantir experienced 93% year-over-year growth in healthcare revenues and 129% year-over-year growth in transportation. This is from the Mariana Bank of America report. So look, like when you see something like this in healthcare, that Palantir has 13% of market share in the United States in terms of all beds that they're powering, is growing 93% year-over-year. Why is that happening? That's happening because their software is being integrated into many healthcare institutions. Cardinal Health is a great example of this. Cardinal Health was a phenomenal supply chain partnership that they had in terms of integrating all the little hospital supplies, the needles, the masks, everything that you need into something like Foundry, which creates an ontology of your data and is able to allow all these supply chains and manufacturers to be integrated within healthcare institutions. The Tampa Bay General Hospital, the Cleveland Clinic, there's another one that I'm forgetting about that was also very important. I think it was called like Concierge or something like that. They've done a ton of healthcare partnerships, and the UK deal and the NHS is obviously going to be very important. When you're growing 93% year over year in just one vertical, one could argue AIP and the byproducts of AI revenue growth in a lot of verticals should accelerate that dramatically. I mean, again, the Novartis CEO talking about how AI and Palantir's AIP is going to be massive for drug discovery. That's not going to happen overnight. And that's the most confusing thing about this Morgan Stanley report is like, it's not happening overnight. I don't know what they like. Their arguments, AIP revenue growth is not here. Palantir now at $15, looking to touch almost $14.99, down 7.78%. I don't understand why they're so hung up about revenue growth not being here, and as a result, the shares should fall. Because if you expected revenue growth to be here, the first year where ChatGPT goes mainstream, you're out of your mind, right? The only company that can do that is NVIDIA because they've done 30 years of R&D, and they are the foundational layer to allow software companies to explode in terms of revenue growth as a result of AI. But it's not going to happen for Palantir. It's not happening for Microsoft. I mean, they haven't even rolled out Copilot yet for Excel and Microsoft Word. So this stuff does take time. And that's why I think if the report presents an irrational opportunity due to a massive dip, then, that's a dip that's worth buying. But if the report isn't taken that seriously by investors because the argument's like, oh, revenue growth isn't here yet, but if it comes eventually, we'll upgrade the stock. Well, if you believe the revenue growth is coming, then the stock will be upgraded. And so overall, I think the report is a nothing burger. Definitely 8% down on the day, hurts the stock. I don't think long-term the report is something that is going to kill the stock. Now, numerically, if a ton of investors or macro conditions tighten up and they don't see AIP revenue growth coming in the next 6 quarters, yeah, the stock sells off completely. I just don't know if that level of sentiment exists yet in the market. Maybe it will, but maybe it won't as well. Shura says, Amit, why Palantir is always going down so much on one bank analysis? Well, Palantir is a very volatile name. It doesn't have a lot of institutional investors. So if someone comes out and puts out a report, just like Dan Ives saying, look, we think it should go to 25, it's going to go up. If it comes down, if a company says, look, it should go down, then it's going to go down. It is absolutely not as secure as some other companies when these Bank of America reports come out. Chris says, Morgan Stanley isn't a predator. Goldman, on the other hand. When's the last time we got a Goldman Sachs report on Palantir? Do even Goldman Sachs? I want to see. What do they have an analyst on this stock? I don't think they do. I feel like I would know, or maybe no, they do. They have a Austin Angelo. Gabriel. They have a price target of 11. Okay, so Goldman Sachs has a price target of 11 on Palantir. They have a hold rating on the stock at 11. So the only companies that have a high rating on Palantir are Raymond James at 16 and Bank of America at 18 and Dan Ives at 25. And Dan Ives doesn't care about the numbers. I mean, when I interviewed him, his entire argument was if you care about the numbers, you're going to miss revolutionary companies, which, look, I know that might be a cop-out argument to some people. It's definitely to Chris. Chris is like, that's a cop-out argument. I'm sure he's thinking that right now, but he is right to an extent. Like, if you only care about numbers, you're going to miss the fact that the market wants, these shares because it's very hard for these companies to be replicated. And there's not that many Teslas. And so there's going to be a premium. And so I think you have to take it with a grain of salt. But numerically, does Palantir deserve to be 16? No. 100% no, given the growth. Given the growth is not there, I don't think it deserves to be there. But I can't argue that the valuation's at 16 because, obviously, investors want the company and they believe in the potential of the growth coming in the future. Let's see what else we have in the comments. Microsoft Premium isn't just based on AI hype. I agree. No, Microsoft's numbers are legit. But for example, let me give you an example. When Microsoft announced AI Copilot is going to be available for 430 million users for Word, Excel, blah, 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 all their suite of products, that they said it's going to be a $30 subscription. If you do the numbers there from the report I was reading 2 months ago, that would add $16 billion in top line revenue. If you just assume 10% of the market takes it, I forgot exactly how the numbers happened, but assume multi-billions of dollars in revenue. The stock jumped to 360. It gained $80 billion in market cap in one day on that news because the market was like, oh, well, if Microsoft's able to integrate, Copilot and everyone in the world is using Excel AI, Microsoft Word AI, PowerPoint AI, or sorry, just 10% of everyone in the world is using those products, then boom, the market should explode. And then the stock came back down to reasonable levels. You could argue at around 312 because they haven't shown any of that revenue yet. And it's probably going to take about 3-4 quarters until that revenue really grows in. And so that same logic, if you apply it to Palantir, the Morgan Stanley argument applied to every single high growth tech name via AI should be slashed by 30-40% because the AI revenue is not there. The reason it's not is because investors think that growth is going to come. And so if that growth eventually comes, then those valuations will be justified. Other SaaS isn't treating near 20 times sales. Snowflake is. Now, Snowflake's growth is better than Palantir, but I agree. And that's why I also can argue for why Palantir could be overvalued at $16. They're trading 20 times sales. Look, if you're not, I don't know why this is controversial. If you are an objective investor, if you are trading at 20 times sales, you're barely profitable because of treasuries, and you are not growing at even 15% year over year, as per the last quarter, you probably don't deserve a massive premium unless you have shown to the market as a SaaS company that you can explode revenues in a couple of years because you have this fundamental product, this foundational product that's going to be incredibly important, and you have justified your moat around that product. I think Palantir has done that, which is why I'm accepting of the valuation today, but I am completely and very sympathetic to the argument that the stock should not be where it is. That's totally reasonable to me. And if that happens, because I believe in that long-term moat, which is a risk I'm taking as an investor, I will buy that dip. But we got to see if it happens. And ultimately, that's going to determine everything. When will Jesse Dow be a part of our special FG episode? Jesse, if you're watching this, we need you on the podcast, man. He doesn't do a lot of public podcast appearances. So if we get him on, that'd be awesome. I've been dying to talk to the guy. I would love to just see what he sounds like. But if he has an open invitation, he is welcome to be on. Palantir will run depending on how big September conferences are. AIPCon will be telling for. Oh, this is another thing. Thank you for bringing this up, Chris. AIPCon. I mean, look, the Morgan Stanley downgrade is interesting, but AIPCon hasn't even happened yet. We've got AIPCon coming up very soon, and September 14th. And when that happens, what I'm looking for is clarity. First of all, I'm looking for diversification of customers. I'm not looking for Jacobs and Cleveland Health. I'm looking for new customers talking about the benefits of AIP. Second of all, I'm looking for customers validating the moat of AIP in regards to the securitization of implementing LLMs into the enterprise, because that's, I think, the core differentiator between OpenAI's ChatGPT for the enterprise and Palantir. At least I think it's one of the core differentiators, and I'll be looking towards how they can justify that at AIPCon. And that's going to be important. Jesse Dow isn't a real person. He's an LLM. The guy's smart as hell. If you guys haven't followed him, I would heavily recommend following him on Twitter. He's also a nice guy. He answers almost every tweet he gets. Like, he's just really nice about it. And he responds to everything. All right, so PayPal. Where's PayPal? PayPal's at $63. PayPal's down a little bit, but my options on PayPal are up. I have 11 debit spreads on PayPal. I bought them in the 700s. They are at the 400s range, so I'm obviously down. I bought one on the dip when it got to like 320, so I DCA'd into those. Those are up today. SoFi calls are up 3%. $10, $15 calls are up. They're at $1.15 right now. And TFC spreads are also doing a little bit better today than they were yesterday. TFC spreads were down pretty badly over the past month. So it looks like the volatility in the market is not that high. Robinhood's at $11. SoFi's at $8.80. PayPal is down, but the options are up. So there may be some volatility going on the options market. Palantir's at $15.03, headed potentially below $15. That seems like the only one that's really red today. Let's get an update on what's going on with the Fed and inflation and kind of where we think the Fed is going to go as a result of what's going on with inflation. Let's share this here, and then we'll go back to it. I love Deep Sing. What happened to Palantir? we're every day, we're all trying to figure out what happened to Palantir.
Barclays head of global inflation-linked research is here to talk a bit about inflation and fixed income outlook, as well as the economy.
By the way, we got to do the game. What does the guess look like? The guess is on the right-hand side of the screen. We play this game with everybody. Everyone's going to get these jokes. I don't care if you're a supermodel looking like a CNBC guest or you're, not a supermodel. Everyone gets these jokes. So what does the guess look like on the right?
I mean, Michael, good to see you. We obviously are expecting, based on the consensus, just a little bit of a pause in this disinflation move in terms of core PCE that we've seen for a while. But we also have Atlanta Fed President Raphael Bostic overnight in a speech, essentially almost declaring victory, saying if you took out the lagging shelter components of inflation, we're almost at target in terms of core CPI as well as PCE. Where do you come down on this idea that inflation is already largely taking care of itself?
Well, we do think it'll pause, and we actually think we'll get a bit stronger number in the core PCE, especially in the super core. So stripping out shelter within services, we actually think it will come in at a fairly strong 0.5, which is not going to leave the Fed with an impression that they're making continued progress. That inflation, while down from its peak, is still too high. So even Atlanta Fed President Bostic's comments, while the market is taking it as a bit dovish, he indicated that he thinks, again, he's one of the more dovish members, he thinks that they'll be on hold at a high level of rates for quite some time. The market is pricing in cuts as early as the beginning of next year. So we think the market is still bearish relative to the outlook and not fully getting the message that the Fed is keeping at it. That's really been the message since Jackson Hole 2022.
Okay, now as much as I agree with him, and you got your guys' answers in the chat were hilarious. Guess looks like he's going to coach a little league team after this. Yeah, that was a good one. He yells at the umpires. I love it. Mel Brooks 25 years ago. That was also good. The one thing that I disagree with him on is that if inflation comes in lower, this idea that the Fed is not going to cut until June, which I think 80% of analysts think the Fed's not going to cut it until June. The thing that we've been talking about a lot over the past week is deflation from China. Right now, we need a good CPI print on September for the FOMC meeting to say we're gonna pause. Core PCE today, if you're just tuning in, came in as expected, 0.2% month over month, 4.2% year over year. That's another reason to pause. The labor market, we got the JOLTS report on Monday, where we had 1 million less jobs in the market, and the private ADP payrolls came out yesterday. On Friday, tomorrow we're gonna get another jobs report of 100,000 or 200,000 jobs less than what we expected. 1 million jobs off the market, 200,000 less jobs expected. We have job growth that is similar to pre-pandemic levels. It's starting to stabilize. Every sign is pointing. And then on top of that, let's talk about China right now. You've got massive deflation coming out of China, and I'm going to prove why we're seeing massive deflation out of China. We should have a potential scenario where the Fed is definitely done raising. And if they're done raising, they should be thinking of cutting quicker than normal because of some of those potential catalysts for deflation that are coming external to China. I think if the China deflation scenario wasn't happening, then I would say, yeah, definitely June, we're getting the first cut, or we shouldn't expect it earlier than June. But China is like a lot of our exports. And if a lot of our exports are going to become cheaper, and on top of that, student loans are starting, which means you've got you've got less discretionary income going into the market, which means there should be just another reason for things to normalize and less money to be spent. If that's the case, we should have rising signs of inflation coming down. And hopefully we have a 2 handle on it by the end of the year. That would be incredibly important. Look at this. China over the last month. Number one, they unexpectedly cut rates by the most they ever did since 2020. That's the first thing that China did last month. Not last year, not over the last 5 months, not over the last 3 months, last month. Second, they removed 50% of their stock trade tax for the first time since 2008. I didn't even know they had a stock trade tax. I would argue it's probably similar to capital gains tax in the United States. So imagine the United States was like, okay, if you make $100, we were going to take 20% of that in terms of short-term gains. Now we're going to take like 2% of that. There would be a lot more trading, right? Because a lot more, people would be excited to trade stocks because it would be taxed less. That's another thing that China did. Number 3, they considered making it illegal to short stocks. I don't know if they're going to do that, but that is one thing that the CCP was considering, and they can do that in a heartbeat if they care, because they don't care about anything. It's an authoritarian regime. They'll do whatever they want. Fourth, they lowered rates on $5.3 trillion of mortgages for the first time since 2008. The real estate index is down 82% in 2 years. Banks are cutting deposit rates for the 3rd time this year, which means it's going to be easier to be able to put your money inside of a bank. And as a result, that should help banks have more liquidity. If banks have more liquidity, they can invest more in the stock market. And then Evergrande has filed for Chapter 15 bankruptcy. All 7 of those things happened in the month of August. And as a result of that, if you don't think that's going to have any impact on the United States, on top of that, exports are down 24% month over month in the context of going to the United States, with Apple deciding that India is going to be their new home, not for everything, but they're really looking at it seriously. I mean, you've got a world where we may see some massive inflation coming. It's just a question of when and how quick that's going to take before it happens. Having said that, let's move on to some more positive news, which is around SoFi. My good friend Chris, Data-Driven Investing, highly recommend everyone follow him on Twitter. He just published an article, literally published an article a couple of minutes ago, and it's about the student loan business. So we're not going to read the whole thing, but let's see if there's any charts he has in here that are really interesting. The title of this article is SoFi is going to crush 2024 estimates because of student loans. From what I understand, there's a $200 billion TAM, as per Anthony Noto, around student loans. A lot of that, I've been seeing SoFi ads every single day on Instagram for refinancing your student loans. Chris, Data-Driven Investing, seems to be more bullish than not in the context of SoFi. Okay, so let's see if he has any charts coming down a little bit here. He's doing a little bit of macro stuff here. So here we go. The net interest income. The spread between what SoFi pays for their deposits and their weighted average interest rate earned on student loans has been shrinking every quarter. This is because their weighted average cost of capital, or WACC, ramped to 1.34% in first quarter 2022, all the way to 4%. All the while, the depressed originations in their student loan business, or depressed originations means like people just weren't creating student loans. They weren't being able to refinance. Means they weren't able to refresh their student loans with new loans at higher APRs. The consequence is that they are barely making any interest income. That's the spread he's talking about on all of their student loans right now. As you can see, the weighted average cost of capital is getting close to the actual interest rate they would be getting on student loans. The spread is decreasing. If the spread is decreasing, then, SoFi is not going to be able to make a lot of money on that. He goes in on his bullish scenario. So his bullish scenario assumes 1.6 billion in fourth quarter 2023, 10% origination growth quarter over quarter, 4% net new income, net or NIM on new originations, a 65% contribution margin as the balance sheet grows to 7.5 billion by the end of 2024. If that happens on his bullish scenario, along with GAAP profitability, that could be very, very exciting in the context of SoFi. The bullish incremental EBITDA growth would put them at 84 million for their full year 2024. I think they have EBITDA right now at 72 million for full year 2023, which they increased just a couple of months ago in May. So that would be incredibly interesting if they would be able to get there. I'm going to put this article in the chat. Again, it just dropped. I'll be reading this after the morning stream, so you guys can check it out. But that is one of the things that's making me excited for SoFi. SoFi is nearing towards $9. It's been stuck in this $8 range for a long time. And I think student loans is going to be one of that things that pushes it up the brink. $8.84 right now. Remember, every single price target on SoFi is close to $9, or is ranging from $9 to $16. Ironically, Truist has SoFi at $16. And again, all these banks that are upgrading SoFi, it's to the detriment of these banks, right? You put out, you're positive on SoFi. That means more people might switch to SoFi and take their money out of your bank. But at the end of the day, if the numbers are the numbers, the banks have to upgrade SoFi. The only price target that's lower are 2 of them, one from Wedbush at I think $3 and another one from Morgan Stanley at $7 or $7.5. So as a result of that, if student loan originations really start by fourth quarter 2023, which I think will happen, which will be February in 2024 when they report, I don't think this quarter they're going to show a massive growth in student loan originations because it starts in October. Then we should be able to see some reasonable premium put on student loans just because of the revenue growth. But the question is ultimately when that is going to be happening. Should we sell Palantir and buy SoFi? It's so interesting because I was late. I was early on Palantir, $15 average on Palantir. I was very early on SoFi in the good way. I was early on SoFi. No, I was late on SoFi, but I was technically early, right? I got in at SoFi at $4 or $5. Obviously, I didn't get in at $30 when Chamath pumped and dumped it, but I did get in earlier on Palantir. So if you ask me which one's going to grow quicker in terms of appreciation, I would argue SoFi, just because I think they have, first of all, they have way less shares outstanding and they have the revenue growth to back it up and the EBITDA growth and they're only missing GAAP profitability, which is going to happen soon. Would I sell my Palantir for SoFi? No, because Palantir is a more long-term hold for me. SoFi, I don't know if I'm going to hold for the next 10 years. Palantir, I'm pretty convicted I will hold till 2030. And so buying right now, I would buy SoFi over Palantir if I had to DCA into one of them right now, because I still think there is more downside pressure on Palantir given the valuation is tougher because of the lack of revenue growth. Whereas SoFi, the revenue growth is phenomenal. And so as a result of that, that could continue to just grow because the revenue growth is there. What do we have here? Just sold my SoFi and bought more Fastly. I've heard of Fastly. I haven't paid much attention to Fastly, but I have heard of that. It's one of those stocks I got to do a little bit more of a deep dive on and explore a little bit more. Okay. Anything else crazy we have in terms of news? I think we'll look at this last clip. August reset for the market. Let's end it off here and get some analysis on this. But overall, CPI or PCE came in as expected, which was good. And I'll have a deeper video in a couple hours on the Palantir Morgan Stanley downgrade. Overall, I don't think the downgrade is that big of a deal. Palantir has gotten hit because of it, but the downgrade is not a downgrade that is a thesis breaker in the context of Palantir.
More about the markets. Our next guest says there are plenty of reason to be optimistic heading into September. Joining us is iCapital Chief Investment Strategist Anastasia Amoroso. So Anastasia, welcome. Good morning. So does this mean you're looking for more excuses to get into the market now versus excuses to get out in PCE?
Yes, excuses to get in. And look, the month of August has been a nice reset for the market. First of all, the fact that the 10-year Treasury is now convincingly above 4% and was there for the bulk of the month. That's been a big reset, just mentally for investors. And at the same time, we did have a pullback in the market. I know we would trace some of that again, but nevertheless, we've had a reset. And as I think about year end, I think about several reasons why I can be optimistic. The first one is the economy is heading into this, year-end period with substantial momentum. The third quarter GDP is on pace for 6%. That's a lot of consumer spending that is supporting the economy. The second point, whether the Fed pauses in September or not, I don't even think that the Fed is even restrictive yet. When you look at the neutral rate for the economy, the projected neutral rate, and where the Fed funds rate is minus core PCE inflation, we're maybe just now at neutral. We're maybe just now getting into slightly restrictive territory. So if that's the case, then there's no imminent recession that we have to worry about for the economy. And then the third point, I would say, again, the reset on the 10-year Treasury. But guess what? We've been accustomed to 10-year Treasury averaging 2.5% since the financial crisis. For years before that, it averaged 5.5%. And I actually think this is an economy that can function with this higher level of rates. So you put all that together, and that's what kind of gives me optimism that after the reset that we've had, investors should be stepping back in.
Okay.
Her analysis is very similar with what Morgan Stanley's, or I think JP Morgan said today. JP Morgan thinks S&P closer to 5,000 by the end of the year. And that's with T-bills still at 4%. I think the 10-year right now today, let's check it right now, at 4%. And again, the logic, if anyone's confused for how the 10-year could still be 4%, but stocks could still go up, is because that's actually a sweet spot for the 10-year. Theoretically, if the 10-year were to go to right now 4.098%. If the 10-year Treasury were to go to 2 or 3%, that would probably scream that inflation's coming back, because there would just be so much euphoria going into the market at that point, and you want that to come down gradually over time. If it went to 6 or 7%, then that means like the market is collapsing. You should absolutely not be in stocks if you can get 6 or 7%, which is half of what the S&P gets, or what the S&P gets on average over the past 50 years from T-bonds with zero risk. So 4% is a pretty sweet spot for it to be in. If inflation comes down, the labor market loosens up, and we still have a 10-year that's at 4%, that's not the worst thing for the market, especially, as she said, if you have positive momentum going into the end of the year, and that positive momentum comes from the Fed being more likely to pause versus raise rates. All right, we are near the end of the stream. Thank you to 471 people being here. The last thing we got to do, we got to do it. You guys know what I'm talking about. You know it's coming. Palantir right now at 7.9% down, $15.04. Word of the day. We got to do word of the day. All right, let's get into word of the day. Here we go. The word of the day for today: seersucker.
Seersucker.
This is a traditionally striped cotton with alternative stripes crinkled in the weaving. We got to see this used in a sentence. I have no idea what this is. The old rocking chair on the front porch was draped in a faded seersucker cushion, evoking nostalgic memories of lazy afternoons. As the summer heat intensified, he opted for a lightweight seersucker suit that kept him cool and stylish. So seersucker was first recorded in English around 1715 after the fabric. So it's a fabric for cotton. It comes from the Hindi word seersucker. I'm Indian, so I should know this. From the Persian phrase sheer o shakar, which literally means milk and sugar. That makes sense, because if it's really soft cotton, milk and sugar, you can argue that that's soft, that's creamy. Seersucker was originally used in workwear, but became fashionable for men's suits in the southern United States around the turn of the 20th century. Seersucker. That's the word that we got. The MS price target was done by a seersucker. See, the word itself sounds like you're insulting someone. It doesn't sound like a piece of striped cotton. And so I'm going to change the definition to, when I use this word, because when I use it, no one's going to understand what I'm saying, to be something more negative, because at the end of the day, sucker, that prefix kind of feels more negative, versus it being used with cotton. However, if I'm ever in Ashley's Furnitures, if you guys know that store in the United States where they sell sofas and stuff, I'm going to go up to the sales attendant and I'm going to be saying, hey, are these couches made of seersucker? And if they can't answer that question, I'm going to tell them that they need to tune into the morning stream, especially if you work at Ashley's Furnitures, to learn more and have an intellectual understanding of the products you're selling in the first place. This was my ex's nickname in college. I love it. I'll use this word of the day when speaking to the wife tonight. Okay, yeah, this is when you're on your bed, pillow, seersucker. Maybe there's something you can say. All right, that's it for me, folks. Thank you all for joining. I really appreciate it. I'll have a video out in about 2 hours on Palantir's Morgan Stanley downgrade. I have a lot of thoughts to say. I have the whole 21-page report because I got the connections. Your boy's just connected in the industry. This is just how it is. If you want the report, message me on Twitter, DM me your email, and I'll send you the entire report. We'll go through everything together, and then we'll go from there. Finance Junkies will be back tonight. It was gone yesterday. Chris can't make it this entire week. And on top of that, Carlos and Vitaly were super busy. Honestly, I got super busy last night. So we'll be back tonight. So 7 p.m. we'll be there to discuss everything going on. And that's pretty much it today. All right. Thank you, everybody. I appreciate it. Have a great, great weekend. Not weekend. What am I saying? It's Thursday. We're not on the weekend yet. And make sure you find a way to use the word seersucker. And if you use the word, whether it's Paganophile, that was the person who loves beards, or Zedonk, that's the offspring of a zebra or donkey, or seersucker, you have to tweet at me, or at least comment on a YouTube video on how you used it, because a bunch of people have been doing it, and it's just great to see how people are integrating it. All right, that's it. Thank you, everybody. I will see you later today. Bye, everybody.